Hello, this is Jim Lucy, Content Director for Electrical Marketing and Electrical Wholesaling. In this podcast, over the next 30 minutes, we're going to give you a look at some of the key electrical market indicators that we think will drive the market in 2019. It's a tricky economic picture to forecast, but I think the data that we're going to be presenting for you will give you a pretty good idea about what might be happening over the next few months. One of the reasons that we're finding it as hard to forecast for 2019 is that we are finding a lot of key economic indicators pretty mixed for the electrical market right now. Some are calling for another year of solid but unspectacular growth. Others are looking at no growth at all or even some declines. While we see the all-important overall non-residential construction market probably slowing down next year, you'll see on a local level that some local markets will far outperform the national average by a wide margin, and the old saying that all business is local will ring particularly true in 2019. You can look for many of the Sunbelt markets and some of those fast-growing markets in the Intermountain states, as well as some of the markets in the metropolitan areas along the coast to do pretty well and probably outperform the national average. One key indicator that we'll discuss in a few minutes is certainly the housing market, the health of the housing market, which we think will be slowing down and could have some impact on the rest of the electrical economy this year. A couple other bullet points, just to kind of hit the highlights before we delve into some of the details. Starting to hear some good news in the educational market, which had been down for quite some time. Locally speaking, there are markets where some bond issues have been passed to fund some of the construction. Some of the enrollment trends at colleges and universities are pointing toward a need for increased capacity, so that's some good news. These bond issues are also supporting the construction of light rail projects, which have been really very interesting to look at what's been going on. We'll dig down into some of the specific projects in just a bit. On the downside, one of the concern across the market over tariffs and what it's cost, how their impact is on certain key metals, such in particularly steel and aluminum. These base metals are up double digits year over year. Copper prices aren't affected by the tariffs, but if you've been following that, you know how much they've changed and have actually moderated quite a bit since 2018. Let's take a look at some of the distributor survey work that we've done, give you a sense of where they see things going for next year. Overall, pretty optimistic, particularly through the electrical wholesaling market planning guide, the forecast that we did. That was done in the third quarter of 2018. Looking at the numbers that we got there, overall they're looking at a 6.1% increase, which to be honest, seems maybe a bit aggressive. I'd love to see it, and it certainly would be very good for the industry. The historical range is between 4 and 8%, so something in that range with all the uncertainty with economic indicators, I think would be quite good. Just to kind of give you a sense, Discorp is forecasting about 3.5% growth for 2019 in their most recent forecast. So I don't know if something within that band or up into the 6.1 is maybe realistic, but that'll be very interesting to see where we fall there. As we mentioned before, all business being local, some markets are expected to do much better than others, according to our survey respondents. In our South Atlantic region, distributors are looking at 7.6%. The East South Central region, which includes states including Mississippi, Alabama, and Kentucky, a bit lower at 5.2%. Just to give you a sense on that electrical wholesaling survey, we got several hundred responses just from full-line distributors all over the country. So we're just banking on their read of the market for our forecast. We contrast that with Discorp, which actually has a time-tested group of economic market drivers that it uses to come up with its forecast there. A big part of the market, one of the more bullish indicators for certain, is electrical contractor employment, which continues to steadily grow, and it's up over the 900,000 range, which we do not see very often at all in the electrical market. It's right now showing no signs of slowing down. For those of you who follow our electrical market planning guide published every November, and if you do use our multipliers, you know that for our most recent data shows that for every electrical contractor employee, you could forecast that they have over $66,000 in buying power, We also, through a survey of top 200 distributors, know that for these companies, particularly the larger ones, electrical contractors average over 50% of industry sales, which does seem maybe a smidge high to us, but that's what our respondents told us. If you're a distributor looking to do this specific to your own market, take that number. You could adjust that number accordingly there. But again, electrical contractor employment on a national basis is looking very good. It's over, as we mentioned here on the slide, over 15 of the last 16 months, over 900,000 employees. We often have said in the past, if you are over 800,000 for the national pace, you're doing pretty good. So 900 is an extraordinarily healthy level of contractor employment. So that's some of the good news that I can bring you in this presentation. We've seen, on the downside, another indicator that we like to look at is published each month by the National Electrical Manufacturers Association, or NEMA. They have what they call the Electro Industry Business Conditions Index, or EBCI. It's a monthly survey of the electrical manufacturer members there, and as you can see in the chart there, it is starting to drop a bit. Current conditions are in the blue, future conditions in the yellow, and anything under 50% shows slowing market conditions. And in the third quarter of 2018, we saw a distinct slowdown in that. Some of the concerns there have to do with tariffs and the impact they're having on manufacturers' sales there. So just an indicator to take into consideration from the electrical manufacturer's viewpoint. One of the other things that there's been an awful lot of talk in the industry is certainly the increases in core building materials. So we did a cover story on this, the September electrical wholesaling had a good cover story on the material pricing. You can find that online at ewweb.com. We started seeing, really started almost entirely, as far as we could figure, from the tariffs, double-digit increases around June of this past year. At that time, steel, it was running the highest there's been lumber and aluminum certainly have had some effect. Lumber not so much now from the latest data I have seen, but certainly people will be looking at this very closely and where we're going with the steel core material pricing. Looking at some of the on the construction part of the market, which is a all-important kind of sweet spot for us here in the electrical industry. One of the things we track construction projects across the nation, certainly one of the biggest areas is the downtown redevelopment projects. And from everything we've seen, looks particularly strong as a segment of the market to look forward to in 2019. A lot of development, which what they call work, stay, play, people where they residential housing close to the market, close to the residential supermarkets, stores and everything, and also close to the offices where they work in. So that work, stay, play is a trend that continues to grab steam. Downtown development, also certainly in some of the suburbs, you'll see this type of thing where there are apartments that are up and built in low-rise developments on top of several stories up, and the apartments are on top of different stores, restaurants. Another index that we like to look at because it's a leading indicator of the market here is the Architecture Billings Index, or ABI, that's published every month by the American Institute of Architects. That's another reading where anything over 50% shows a positive environment here. And the architectural Billings Index looks out several months, almost, I should say not several, maybe about 6 months to a year ahead of time to give you a sense of where the market's going. And it looks good going into 2019. I mean, another close, important one to monitor, but definitely looking pretty solid going forward. So that's another one, another indicator in the growth column. Another AIA is a good source of information on the economic side here. Another forecast that they publish that we like to look at, I believe it's updated twice a year, is what they call the Consensus Construction Forecast. It's a forecast from several of the leading economists in the market, including Dodge Data and Analytics, IHS Global Insight, Moody's Economy.com, FMI, CMD, Associated Builders and Contractors, and Wells Fargo Securities. If you look at the total non-residential market that they're projecting this year 4.7, next year 4.0. commercial 6.7 this year, 3.4 next year. So you can take a look at the slide here and download this if you want to get into some of the more specific numbers as we're going through. But as you can see, looking at some steady, if not particularly spectacular growth, but all in all, looks pretty good to me as far as what they're seeing in the various segments in there. Another good indicator that you can look at for, we always have published it in electrical marketing, but if you're looking to get a sense of some of the historical data as well, you can go to construction.com and pull out the Dodge Momentum Index. And this is another forward-looking indicator, measure the first or initial report for non-residential building projects and planning. This index leads the total construction spending by a full year. It's been a little up and down lately. November actually was a pickup after 3 consecutive monthly declines. But if you look at the chart on the left here, you can see that overall it has been on a pretty good growth track right now. So it'll be interesting to see where we head over the next couple months with this. But this is a relatively new index that Dodge has been publishing over the past few years. It's a nice succinct look at the market that you might find to be of interesting. Another market, if you're longtime readers of our publications know that we refer quite a bit to the Dodge Construction Outlook. Just a little historical point of data, electrical wholesaling, electrical marketing, and EC&M magazine, one for quite some time, had all been part of McGraw-Hill, as was Dodge, and we were in the same division, got to know the folks there, and have been attending their Outlook meetings since the 1980s. So we like what the data that they produce there, and Robert Murray, their VP of Economics, always does a great job of forecasting what he sees in the market. So this year's, and to be honest with you, this forecast that they did, that they released at the end of this past October, showing just about no growth for next year. Total construction activity, you see in the chart there, it was $806 billion in 2018. Next year, $808 billion. Some of the big drop that they're looking at here is in single family, no growth, multifamily going down 6%. Institutional spending, which includes schools and hospitals, slightly stronger at 3% growth. So that's looking a bit better. But the Dodge construction forecast is always something to look at. You can find some updates on specific project data on a monthly basis at construction.com. If you have a real interest in digging into the statistics, I urge you to attend their annual economic forecast just to get a little sense of the market from Robert Murray and his other economists on staff there. As you break down, looking specifically at the construction market, hottest project types that we've aggregated have been the data centers are particularly big, and as you can see here in the chart over the past year, this is to give you a sense of projects that are breaking ground, underway, or are in the planning stages. A lot of work being done by the tech companies, or what in the stock market you might call the FANG stocks, the Facebook, Amazon, Netflix, and Google. You'll see a lot of those names up here all over the country, really, these data centers, and they're pretty electrically intensive as far as the amount of electrical materials that they require. Many of them are in the $500 million to $1 billion mark. So we see quite a few of these in our electrical construction project database. If you've been poking around the electrical marketing site, you can see that you can download the latest information that we've aggregated on construction projects. Every quarter we go through it, and the database as a whole has several hundred construction projects. We just go down to about 100 million and up, but it'll give you a pretty good sense of where some of the bigger projects are and what type, and you can get to the links there and get a little more information from the various newspapers and other sources, websites that have been publishing information on these. We've also noticed over the past year quite a bit of work in light rail and mass transit. As you can see here in the chart, there are quite a few projects throughout. And New York has got that big one, probably maybe I guess the bigger, you might say one of the bigger ones in the nation at the Daniel Moynihan Station is the redoing Penn Station. That'll be a big project there. We've got light rail projects in Minneapolis, Charlotte. San Francisco has got some work in the planning stages. Bullet trains being planned down in Texas. You've got interesting, what seemed to be an interesting company called Brightline, which is got some large longer distance lines being planned between Orlando and Miami, and also Orlando and Tampa. So quite a few really interesting projects being done in this market. It shows no sign of letting down, and I think that this will continue to be one of the bigger construction areas. Here you can take a look at the contract value. Quite a few projects here over the total $1 billion in sales. Just to kind of, as one aside, just a very rule of thumb, when we list the construction values here, that's total construction. We don't specifically break it out by electrical. A rule of thumb is that electrical is often about 10% of the total contract value. That will, of course, depend on the type of project, but 10% of that number you see there is a pretty good feel for the amount of electrical equipment to spend in any of these projects. Another good indicator to look at, that we always like to pull out information from companies like CBRE and some of the other commercial construction forecasting companies and real estate companies, vacancy rate. And basically, if something's under 10%, that's exceptionally good. And we overall, through the third quarter of 2018, total vacancy rate for the United States was 12%. You look at some of the specific markets here, well under 10%. New York, Midtown, New York, San Francisco, looking at Midtown, South Midtown, Seattle, some markets that are doing extraordinarily well as far as the amount of the need for additional office space there. On the flip side, if you look at some of the markets with the highest vacancy rates, and we've always generally looked at as something over 20%, but you can get a sense here of some of the not too many local markets in that outside of Westchester County, Dayton, Ohio, and Fairfield County, but you can see the markets like Houston, Central Business District of Los Angeles, and Northern Virginia at about 19%. So that'll give you a sense of some of the good news and bad news of office vacancy rates there. Certainly another market to kind of for many of you out there to look at the residential construction market. In terms of electrical distributor sales, depending on the company, you can usually guesstimate that at between 15 and 20% of the entire amount of product going through the electrical wholesaling industry through electrical distributors is going into residential applications. It's NAHB, the National Association of Home Builders, provides a number of different types of forecasts, and they're looking at a 3.8% increase for single-family housing at 19, and slowing down to 2020, 1.7%. They're looking at a decline of 3.7%. In 2019, a smaller decline, 0.6% there. You're starting to see kind of the macro indicators on here. Starting to see some problems with mortgage rates are starting to increase. There's some, mortgage rates are starting to increase, affecting the demand for new homes. We're seeing some trends of some of the younger first-time home buyers in the millennial generation, where they are still paying off their student loans, many times living in their parents' basement until they can afford to get a down payment together. And there's some of the larger, even though there's historically speaking, there's a good number of millennials that are in that core and key home buying early years. A lot of them just can't afford to get the money together with the way housing prices have gone. So this will be an interesting one to look at. Single family housing, basically it leads the rest of the other construction categories in the local market once the home projects are gone in, whether they be multifamily or single family. They go in and they create demand for the service economy, whether it be shopping centers, gas stations, medical offices, schools for certain, and lots of other things that needed to service the needs of the new residents. So this will be a longer term trend to definitely look at. As I mentioned a little bit earlier, we have had some markets that are doing amazingly well as far as the number of new housing units that are being put in, particularly in single families. And let's take a look at some of these numbers here and a year-over-year change for markets, and particularly in Texas here. And the largest number of new building permits sourced, and this is a source U.S. Census Bureau. Looking for the Houston metro area, over 3,700 single-family starts. Dallas, 2,300. Atlanta, 1,400. Austin, Texas, 1,400. You can see some of the double-digit percent increases there. There's a lot of very hot markets, and every one of them is in some part of the Sun Belt. So maybe no surprises there. I believe if I'm not mistaken, in Florida, almost every single of the major markets in Florida are up over 10% in housing projects just yet. So a lot of growth in some of the vacation areas for sure, and also some of the Austin, Texas, that the Phoenix has been doing huge business in single family as well. So be interesting to see where they're at. We mentioned before as institutional construction, a key element of that, certainly K through 12, kindergarten through 12 construction projects for schools, also college and university here. I gathered some statistics here for you from the National Center for Education Statistics, and to give you a sense of where the enrollment trends are headed over the next couple of years, to give you a sense of that there is, as you can see, and particularly at least through the 2020, 21, 22, will be a growing need for growing enrollment, which will require additional schools and universities for new construction. So overall expected to peak 2020, but even after that, still operating at a pretty, I guess you could say for sure, a pretty strong level there. So I think there's some good news ahead for us in education and school and universities and K through 12. Obviously, big user of electrical equipment, whether it's the standard power systems, whether it's the energy efficient lighting upgrades, sports facilities, data security. Lots of markets in here. This is going to be a good market, I think, going ahead. So keep an eye on the educational market. Let's take a look now, switch our sights to the industrial market right now, kind of get a sense of what's happening in there. I think with industrial market, I think hopefully everyone's kind of past saying, oh, factories are leaving the U.S. It is what it is right now. The long-term trend was, there was a great drop in number of people who have factories, but people, I think, mostly have adapted to the industrial base as it is here and have to just kind of have to do business with it accordingly. A good measure of that, a very popular measure here, is certainly in the general business press as well, to measure the health of the market, is industrial purchasing managers, an index put together by the Institute for Supply Management, and we call it the PMI, the Purchasing Managers Index. And really, as you can see, some good news here. I mean, again, it's over 50%, shows growth. Under 50%, less bullish, less optimistic. And as you can see here, it has been over the 50% line since 2016. So very good. Some of the anecdotal comments put out by the purchasing managers, concerns on tariffs related and the impact on higher cost of base materials, but overall, a good sign. Another good indicator for the health of the industrial market is looking at the national employment level for industrial employment. And as you can see in the top chart there, since 2013, it's been rather strong. There's been a steady increase over the past 5 years. To try to get a sense of any changes in direction, we like to take a look at the 3-month moving average and compare it with the 12-month moving average. If the 3 months starts to decline or increase, we look very closely at how soon the overall 12-month or year-over-year average will change. The 3-month usually leads the 12-month by about 4 months. As you can see in the chart there on the right, it's just starting to tail off maybe just a little bit the 3-month moving average. So you don't want it, once it crosses that 12-month line, that we may be looking at a downturn coming up. But so far so good. I mean, nothing dramatic just yet, although we're seeing some early indicators. Again, one of the reasons that we track and we suggest that folks doing market planning in the industry track the industrial employment and on a local or state or national basis is that we have some data on the amount of sales you can estimate per employee. An MRO account is $789 for each employee, manufacturing employee in MRO sales, $825 in OEM sales, and $108 for a factory automation account. Another indicator, the more of a broad indicator, I guess you could say, is the capacity of utilization for an industrial facility. That's how much of the facility is actually being used. You can get a sense here about, if you look at the chart here, far left, 2008, 2009 was the recession. You look at how low that utilization was, all the way down to 62%. It did climb fairly rapidly from that point to where it was over 75%. Right around 2012. Over the past 5 years, it's been over, for the most part, has been over 75%. Generally speaking, the rule of thumb in this one is that once it hits 80% is when there's a need for new factory development. And on a national basis, we haven't hit that 80% rate. I wouldn't get too caught up in this. Certainly certain industries, certain regions of the country, they are certainly building new facilities, retrofitting old ones. But this will just give you a general sense of where we're at as far as the capacity utilization. Sort of a good but not great story here. Well, one of the things I like to check this number. It's railroad freight, and if you think of all what you look at, all the different types of products and things that are transported by rail, it's considered a very good indicator. And the American Association of Railroads puts out monthly data on what's being transported by freight trains. And as you can see, the big one this is year to date, petroleum products up 16%. The overall has been up 1.8% year over year, and this was through the late fall here. But you can kind of get a sense of where we're doing. But rail freight is an interesting indicator there. Look at oil prices. It's been a kind of a wild ride in oil prices here, but a good indicator for many markets that have anything to do with the oil industry. We were certainly not at the heights where we were. We were up at $100 a barrel and more from around 2010 through around 2014. It was climbing pretty solidly for since 16 all through the 17 last year. It started to tail off a little bit here, but still a bit down, but it will be interesting to see where this goes. Another indicator that we like to look at for the oil market, to look at this part of the industrial market, is how many rigs are in operation. And you can get this information through the Baker-Hughes rig count. And they look at it by actual basin, by state, obviously nationally here. The big takeaway for me on this one is just how big Texas is for the current oil producing states here. If you look at the number of rigs, well over 500 rigs in total. Their big basin, the Permian Basin, West Texas, that's around Midland and Odessa, has 493 rigs operating in that one. And you can get a sense of the other big oil producing states here, what's going on the Baker-Hughes rig count. So a good one to take a look at if you're looking at that particular area. This concludes our podcast for today. Please do remember, if you need any additional electrical market forecast information, different demographic statistics, go to Electrical Marketing's Data Resource Center, available only to paying subscribers to Electrical Marketing. You can check out our quarterly updates for electrical sales estimates at the metro, county, and state level, our product sales estimates for 17 electrical product categories. You get access to a construction project database with hundreds of projects that are updated quarterly. We also have regular updates on our information on building permits and population updates at our metro and state level. We've got a great promotional rate for electrical marketing going on right now, only $99 per year. It's a killer rate for the type of information you get, which will include all the market data and electrical sales forecast discussed in the podcast here today. You also get the electrical marketing newsletter, which is published twice a month. You can get that newsletter as part of your subscription in either the online access to the website, you can get it in the downloadable PDF, or in a print copy. For additional subscription information, please contact Sonia Trent in our audience marketing department at 913-967-1641 or at the email address listed below. Thanks for listening to Electrical Marketing's podcast on 2019's key electrical market indicators. We'll have a new podcast with fresh information coming up in first quarter 2019. If you have any questions on the information you've learned about in this podcast, please contact myself, Jim Lucy, or Doug Chandler. If you see us at one of the industry trade shows this year, please pull us aside or give us a call with the contact information or email information that's available here. Thanks for listening. We look forward to speaking with you in our next podcast.